We are halfway through the results season and halfway through the banking season results as well. The big three, HDFC Bank, ICICI Bank and Kotak Bank, have announced their numbers. Three more biggies, Axis Bank, SBI, and maybe you can put Bank of Baroda in that list, are yet to report. Axis this week itself. Among the mid-cap ones, again, we have IndusInd, Federal, Bandhan, all of them. But a bunch of other mid-cap, PSU and private, are yet to announce. So, mid-season review of the results season is what we have for you with an expert, Manish Agarwalla, the co-head research and the banking expert at PhillipCapital. Manish, good morning and thank you very much for sparing time for us. Let me start with, HDFC Bank, though I have your very positive report on ICICI Bank. But let me start with HDFC Bank. You point out in your comparison that deposit growth has been underwhelming for HDFC Bank, as have been margins and ROA compared to ICICI. So do you bring down your estimates of HDFC Bank? Are you still a strong buyer in this stock?
Yeah, good morning. Thank you for having me on the show. HDFC Bank, we all know they will have a challenge in terms of deposit growth because of the merger-related headwinds. However, we don't bring down our earnings for HDFC Bank. But what we believe is that going ahead, since there is a moderation in the growth from a medium-term perspective, I think multiple will stay where it is right now. We don't see a room for multiple expansion for HDFC Bank. However, the favorites of the market has been ICICI Bank. This quarter, we have seen a very strong demonstration of deposit accretion, despite the fact that HDFC Bank is very aggressive in the market. So I think ICICI Bank will remain a preferred pick by the investor in the medium term at least. Okay.
Well, I just wanted to say one point on behalf of HDFC Bank, if you please. Even in the table that you give us, although the quarter-on-quarter increase for HDFC Bank is 1.9% in deposits. If you look at a year-on-year comparison, they are over 19% for ICICI Bank's 17%. And this is happening on a fairly large base. They appear to have slowed only in the fourth quarter. I don't know if that's by design, because third quarter their deposits were like screamingly high. So would that mean that HDFC Bank can deliver what the MD promised, doubling the bank in 4 years?
Yeah, we don't doubt the management guidance. However, our sense is that there is a requirement for the deposit to replenish the borrowings of Limited. There is a requirement for deposit to take care of PSLC requirement, for investment for SLR and CRR. So my sense is that probably the growth might be slightly moderate in line with industry average, or maybe a percentage over industry average, which is unlike of what SDFC used to deliver in the past. So because of these moderations, probably market might not be very comfortable giving a re-rating multiple from here on.
Fair enough. But, okay. Just to persist a little more, now in the housing sector itself, which is again secured and your credit costs tend to be lower, provisioning tends to be lower, there they may have an edge over everyone else because they already have an excellent marketing team and very, very cheap cost of money compared to the erstwhile HDFC. You think that they can turn the tables on that front?
See, mortgage market has always been very competitive. I understand that HDFC Bank will have a better cross-sell opportunity here. But the thing is that the market, all other banks are quite competitive. There are DSAs playing in the market. At the same time, we should not forget the fact that HDFC Limited's mortgage franchise was also built on the relationship with the developers. Now, we have to be very cognizant of the fact that how this relationship go ahead with HDFC Bank. So that will be a very key deciding factor, how they pull up this mortgage business or housing business for themselves.
Okay.
Close.
All right. So it's a wait and watch until then. I take your point to whether they are able to cross-sell as effectively. What the management told us during the various press conferences is that HDFC used to lend only in very, very urban centers, and now they have deeper penetration possibilities with the bank. But one more point on the HDFC, ICICI, Kotak comparison. This is something that came from Financial Express today, and we have not personally verified it. The story says that the managing director, Jagdishan, met Apple very recently, and when Apple Pay comes to India, they're going to tie up with HDFC Bank. Will that give them an edge on credit cards and therefore that kind of products?
See, we can never undermine the capabilities of peers at the same time. Yes, HDFC Bank will have a very competitive partner there, but we cannot undermine the edge or say capabilities of the peer bank. I think everybody is working on their strategy. Secondly, credit card market is getting more and more competitive. Our sense is that the ratios or return ratios in this business can only come down from here on because there are pressures on say reward points, there are pressures on NDRs. So our sense is that top three players will remain very, very competitive in this business. Yes, the other lot might see some higher pressure compared to the larger banks.
Okay. So right now, if you have a buy list, what are they in terms of the top results declared already?
Yeah, so we remain very positive on ICICI Bank, followed by IndusInd and Axis Bank. We like HDFC Bank, but we see that HDFC Bank return from here on would be in line with their ROE. So probably that's also decent enough kind of a return. But in terms of preferred pick, this three would be my preferred pick.
Okay, your 1140 I saw was the target price for ICICI Bank. We are running that line. What would the target price be for Kotak and HDFC Bank?
So for Kotak, our target price is 2,200. And for HDFC Bank, we have a target price of 1950. So this target price, probably, we will revisit all these numbers as we progress in the subsequent quarters.
Okay. Well, I'll, time permitting, come back to Kotak Bank since there will be a change of management shortly over there. But let me just quickly speak about Axis and SBI. I'm more interested in SBI. Would that rank among your top buys now? There are some analyst reports I read which are seeing a blowout quarter for SBI this year. Your thoughts?
Yeah, you are right, Latha. See, PSU Bank, might outperform in terms of credit growth this year. If you look at the credit growth number for the industry, we were positively surprised, despite the Q1 being a very moderate quarter or modest quarter. And if you look at the results published so far, our sense is that the SBI can outpace significantly from what they have been guiding in terms of credit growth. Second to that is the margin. Bank is sitting on excess liquidity. Probably SBI along with other public sector bank will be in a much better position to withstand the margin this year. So we remain upbeat on SBI from here on.
Okay. What kind of a margin are you expecting?
So our sense is that probably SBI should maintain their margin in FY24, what they reported in FY23, which is again a good performance compared to what.
Yeah, one of their best performances. That's right. Within the PSU banks, would you maintain a buy on any other? Is BOB one of your buy list, I thought?
We play this space through SBI.
All right. Okay. So not coming down to BOB, though it has got into the buy list of some brokerages. Okay, Manish, a more general question. There are some banks which are beginning to show that the best of asset quality improvement is behind the system. If you looked at, say, Federal Bank, which else? Just now, I think, was it Canara Bank? And even Bandhan, the AU Finance. I'm just taking across the spectrum. People have shown a slight increase in slippages. It looks like the best of credit cost is behind the banking sector, you would say?
Yeah, so credit cost, if you look at, they are below the historic mean.
Yes.
So further improvement from here on looks difficult. I agree to that point. But what is more important is the sustainability of the credit cost at the current level for at least for next few years. That's what the call we have. So we are not much worried about this quarter's slippages movement by some of the bank because we give a benefit of doubt of Q1, this being a quarter where there are some agri-related slippages which come at the same time the recovery and upgrades takes a backseat at this point in time. So we are not much worried. Yes, we are watching some of the unsecured space, specifically in the low ticket bucket, very carefully. But most of the banks are not very prevalent in that space. So we are quite comfortable with the credit cost, at least for next couple of years.
Okay. Anything specific on Axis Bank that we should watch out for?
I think asset quality probably. I think the flow from restructured will be complete in this year. We will be more worried if the flow comes from the book which were built in previous couple of 2-3 years. So that is the area where we will be very watchful. Otherwise, I think the corporate cycles are very favorable. India still, deleveraging on retail side, bearing few pockets and few asset class. I think we are quite comfortable at this point in time.
Okay. Just a word on Kotak Bank. Would you change your view now that Uday Kotak will no longer be actually at the helm, even if he's a non-executive, non-independent board member?
See, Kotak has built a very strong franchise driven by process. Yes, the top management matters the most in banks, but we won't be much negatively moved by this change. However, in case of Kotak, the arguments are slightly different from our point of view. We see some pressure on the margins for them. This at the same time there is a cost buildup in terms of OPEX. And finally, Kotak has accelerated the pace of unsecured business. Now, probably the credit cost will not remain where it is. Even the management has increased their guidance for credit cost. So there are few changes because of the balance sheet mix change. They should continue to report one of the highest ROA in the system. So our call is that probably the growth and the philosophy should continue what Kotak has started, Mr. Uday has started. But again, the point here is that in the sector, since the slate is clean, there are growth opportunities. I think investors are picking the stocks where there is a value, there is a growth. So that will be the winning names even going in.
Okay, I'm being warned. I'm out of time, though I'm not out of questions. Just tell us your entire buy list in the banking space. You told us Axis, ICICI, and IndusInd. Any other?
So in a small space, we continue to like Federal Bank. We like Equitas. These are the names which we like. Even for the PSU Small Finance Bank, I think this year is a tough for them because of margin pressures. But some of these names are a play on the interest cycle reversal. So we will accumulate some of these names over the year.
All right. We will invite you later for a more detailed analysis after the entire result season. Thank you very much, Manish Agarwalla, for preparing us for the results henceforth and for giving us a view on the results so far. The markets haven't gone anywhere in the meantime. Absolutely as flat can get, with the mid-caps a bit nose ahead. That's all. Quiet day. That will give time for more analysis, and that's what's coming up for you on Chartbusters after a short break.